Hi everyone, it's Nick Jerislow here with the Jerislows Happy Home team, and I know this is the video you've all been waiting for, and that is our 2019 Seattle real estate forecast. So here we go. So I think it's really impossible pretty much to predict the future, but the best thing we can do is look at what's happened historically to indicate trends and understand where we are today, to then kind of have the best projections of where things might be going tomorrow. So what we're looking at here is a pretty comprehensive look of the real estate market in the Puget Sound area over the last 34 years. This shows you what the year over year appreciation is each year. And then down here, we're kind of tracking with what the median home price is. If you've watched any of our videos before, you know this is like our favorite graph because we use it all the time. But it gives a lot of really good information in a good visible way. So you can see, the market we had our previous peak and valleys here were back in 2007 when it had peaked at 481,000 for the median home price. It then slid over $170,000 in just 5 years down to a bottom of 308,000. That was back in February 2012. And then in the next following 5 years, prices more than doubled. They increased over 300,000 in that same 5 year time span. So, and it was driven by sound fundamentals of lowest supply in 22 years. Demand was very high, driven by low interest rates and also tons of high paying jobs coming into the area. And just they couldn't replenish the supply quickly enough with new construction. So, but at the same time, when it's double digit appreciation compounding year over year, wages can't keep up. And so 2018 largely saw us finally hitting that ceiling of what the area can afford. And so this kind of shows you how 2018 wrapped up. In terms of the median home prices, they were more or less flat across King County, very moderate appreciation. And then in terms of closed sales, you can see there was a dip there as well across the various parts of King County and Puget Sound. So kind of see some of the other supply and demand factors that we were looking at for the last 5 years to kind of see what some of those trends look like. You can see that for 2018 over here on the right, we had inventory peak in September with 6,500 homes for sale. That's the most that we've had for sale since 2012. And then it did have a very steep decline as a lot of people were either selling or pulling their homes off the market when they weren't able to get the prices that they were hoping for based on how previous years have performed. And so now inventory is nearly half of where it was just earlier in the fall. However, we are starting out 2019 with almost twice as many homes that we had for sale the same time in 2018. So with that has created a couple different perceptions in our market. And so this is looking at the sales price versus list price percentages. So for, the last 3-4 years, homes on average in the greater Puget Sound were selling for 100% or more of their asking price. And so last year was really the first time that dipped below that level since 2012, 2013, and it dropped pretty fast. So right now, as of last month, homes on average were selling for 95% of their asking price and are sitting on the market for about 50 days. So homes are still moving. It's just they're going to be taking a little bit more time through 2019. One, because there is still just more inventory to choose from, and two, the perception shift has really kind of transitioned and getting a bit more to a stable and balanced market as opposed to the just hyper competitive bidding war, wave everything type of market that we had seen for really the last 6 years. Now you might have a chance to actually get a contingent offer accepted or, negotiate inspection repairs. Or as a seller, you could have the comfort of knowing maybe you can make another offer on a home contingent on the sale of yours, and that other party will be, okay and willing to take your contingent offer because they're just happy to have something in hand worth negotiating. So you're going to see that kind of be, I think, the main trend for the year. Mortgage rates, it's really, the things are so volatile right now with the market, so it's really hard to kind of predict where that may go. The National Association of Realtors chief economist is forecasting rates are going to creep up to 5.3% by the end of the year. This kind of shows you where they've been over the last 48 years. You can see they peaked back in 81 at 18%. And, over that 48 year span of monitoring these rates, they average 8%. And today we're at right around 4.5%. So, I think there's going to be likely some more volatility there. And even if they trend up to 5%, we're still well below they've been over long historical averages. And then this kind of shows you just a more of a laser focus on where rates have been just for 2018. So you can see they went up virtually a full percent just over the span of that year and settled back down quite a bit in just a few months. So hard to really want to make any forecasts there, but the volatility is something to be very mindful of when it does creep low like it is today. So the other demand factors to think about is that we still have a lot of growth already in the pipeline for the Puget Sound. So you have more tower cranes and buildings going up in Seattle than anywhere else in the country, more than twice as many as New York City, for instance. And so there's a lot of apartments that are in that mix, but also a significant amount of pre-leased office space as well. So there's still growth in the forecast ahead of us here. And for the last decade, Seattle's population has had the fastest growth rate amongst the 50 largest cities in the U.S. And so just last year alone in Seattle, Tacoma, and Bellevue, there were over 46,000 jobs that were added. Unemployment dipped from 4.5% down to 3.8%. So we still have a very well-employed and high-paid workforce, and still are going to struggle to meet that supply that's going to be needed for all these people that are continuing to flow into the area. There's a lot of job growth still happening. Amazon has over 3 million square feet of office space under construction that'll house about another 10,000 employees. That's just in Seattle. They have another 1 million plus square feet in Bellevue underway. You also have Google having a big expansion that's going to have about 4,000 employees downtown, as well as Apple, Facebook, and Google have nearly 7 million square feet of office space planned throughout the greater Puget Sound region. Boeing, they are slated to have record profits for 2019, and their 737 and Dreamliner production is going to be increased. And Alaska Airlines is planning to hire 3,000 people in 2019 as well, among several other, obviously, companies and such. But there's just a few kind of key ones to highlight in terms of more job growth and population influx coming to the area. And so that's always going to be a challenge, with our area just due to our geography. Because if this is kind of looking at Washington State long-term projections, we're going to be needing about space for 3.6 more million people in Washington State over the next 20 years. And we have a very limited geography here with all the mountains and trees and wetlands and streams. So we can't just build endlessly. So there's always going to be that kind of long-term constricted supply driving the market as well. So ultimately, I think 2019 we're going to see balanced market, very team appreciation, more time to kind of think and negotiate things through. If you want to see kind of what all of this means for you specifically, whether you're looking to buy or invest or you're possibly selling in this market, please feel free to visit us online or call or text or email, and happy to help any way we can. And thank you so much for tuning in.